are so many different ways that you can invest. You can invest in stocks and bonds and exchange traded funds and mutual funds and NFTs and art. But your pantry, yeah, your pantry where you buy stuff that you're eventually going to eat, maybe. Scott Baker is an associate professor at the Kellogg School of Management, and he and some collaborators did some research on the way that some households use this inventory of household goods to get a better handle on your money. He joins us from Chicago, Illinois. Hello there.
Hi, good to
I
be here.
love I love the headline of this research. It's the hedge fund in your pantry. We're going to talk about the details, but before we talk about what you found, can you talk a bit about the research question? What were you trying to understand?
Absolutely. So what we were trying to understand is, the extent to which a lot of households are kind of managing their levels of household inventory optimally, or the extent to which they are able to kind of engage in different sorts of shopping behavior, going to different stores, bundling trips together, shopping in bulk, or buying in bulk or buying things on sale in ways that are going to enable them to kind of consume more for a given amount of money.
There are, I'm sure, ways in which one does this well. There are also ways in which one does this poorly, but people think they are doing it well. And what I'm referring to here is the law of Costco. It's like the law of gravity. There is no way you can leave Costco without spending $300 because you go in for bathroom tissue and you leave with 3 rotisserie chickens, 2 liters of shampoo, and a pair of jeans. So, how do you ensure that as you think about what you're buying for your household and the inventory management, that it doesn't lead to overspending?
So we're not able to see a lot of the details of consumption for a lot of these households. We're mostly looking at kind of the overall distribution. And I must say that on average, people are doing very well, that they are engaging in a lot of these strategies in ways that kind of our model would predict. Households are kind of shopping fairly optimally, and they're engaging in a lot of strategies that enable them to kind of stretch the dollar to a much larger extent. And this holds for households at the bottom of the income distribution as well as those at the top of the income distribution.
We're going to talk about the strategies in a second, but where'd you get this data?
So this data is from a company called Nielsen. So they have a survey of 60,000 households that basically scan every purchase that they make, everything that they buy in the grocery store and a pharmacy and things like that. And then we're able to pair that with data about these households in terms of kind of demographics and income and family composition. So we have a good idea of kind of who they are as well as what they buy.
Yeah, they're a juggernaut in the packaged goods arena because they're the big reporter of market share data. I want to ask you what some of the strategies are. So, if I were to oversimplify it, it would mean, like buying in bulk and you're going to get a lower unit cost. Give us more perspective on what people are actually doing.
Absolutely. There's a few different kind of channels that we can see households engage in. One of the big ones, as you mentioned, is buying in bulk. So we can see that when you buy with a larger unit size, the unit cost of the good that you're buying is much smaller. You can also then just shop on goods that are on sale and basically stock up on items. So kind of similarly to buying in bulk, if you see that there's a sale on chips or on milk or on paper towels, you can kind of maybe buy a bit more than you normally would. And then finally, we see that people can essentially bundle trips together and take a longer time between trips to basically reduce shopping costs, which are kind of either an explicit cost if there's fuel or public transit costs to get to a store, or implicit costs like the cost of time. So if you do bundle 2 weeks of shopping together, you might be able to better save a bit of time and money later on.
You mentioned that your analysis included other demographic details, things probably like household income, geography. What are some insights that you were able to glean from those other things?
So interestingly, we found that a lot of this behavior is not well predicted by a lot of detailed demographics. We do see that, shopping behavior in general is affected by, the presence of children, the ability to, higher income, having larger houses or living in areas with more dense housing arrangements. But in general, the sorts of kind of optimal shopping behavior is not necessarily well predicted by a lot of these. I think there are things that relate mostly to consumption. So if you have a household with more individuals in them, more children, you kind of have more of an opportunity to shop optimally just because more of your income is going towards these sorts of expenses. But other than that, there are kind of people of all types and all incomes that are kind of doing very well by this metric.
One of the questions that wrapped around the research that you published was around whether consumers are behaving rationally. And the case that it made here is you got 500 extra dollars. Should that go to an investment account? Should that go to consumption? What are some things that you learned about how rational consumers actually are?
Yeah, so one thing that we came out of our model and the data is that the marginal return, so the kind of return you'd get from investing one more dollar in what we've termed household working capital, is very, very high at low levels of working capital. So if you only had, $200 total to invest in your pantry or in kind of household non-durables like groceries and pharmacy items, that additional dollar goes really, really far. So you can get annualized returns of, 50, 60, even 100 or more percent. But this marginal return declines very rapidly. And as you get closer to, say, $1,000 or so of total inventory, the marginal return of investing kind of an additional dollar, going out and building up your inventories more is often zero or even negative. And so
Okay. Okay. And why is that?
yeah, it's essentially bounded by depreciation, which is, you can only buy so many, boxes of cereal or cartons of milk before they start to go bad before you can actually use them. And so we see that, households do tend to hold about 700 to $1,000 worth of inventories, suggesting that they are indeed kind of exercising this option to its fullest, and getting a lot of the benefits from this in a fairly rational way. So kind of going back to your question of, are households behaving rationally? We would say that, on this dimension, which has been something that is essentially invisible or hard to observe, households are engaging in a lot of, fairly rational and fairly sophisticated shopping behavior.
Hmm. I was doing some research on TikTok, of all places, about people who were compulsive couponers, who were really like into the couponing game. And I think what you're pointing to is that there is a limit to which you can stock your house full of bath tissue at a point in which it doesn't serve you anymore. Is that an accurate characterization?
Absolutely. Yeah, I think some of those stories, I mean, you often hear quotes from those individuals saying, we end up giving a lot of this to, homeless shelters or soup kitchens or our friends and family because we can't really, consume it all. So to
Yeah.
the extent that you can increase the consumption base that is using that by, giving it away, then you can kind of use it, but probably not using it
Yeah.
themselves.
I started my career at Procter and Gamble. We sold packaged goods, and anytime I could get someone to buy a club pack of facial tissue, it was a great day because they consumed more. So my view of this pantry stocking is, wait a sec, no, because then you feel like you've got an infinite amount of facial tissue. Far better to have half a box that you'll never get a cold because you won't have any facial tissues to deal with it. I did want to ask about what takeaways you would offer for people. It sounds like the research was fairly optimistic. People are doing fairly well. What would you want people to glean from this that may help them at home?
I think that, keeping this keeping those depreciation costs in mind are always good. Are you actually going to use what you're going to be buying, even if it seems like it's a good deal? But in general, I'd say, people keep doing what you're doing because it seems like you're managing your household inventories very well.
Very interesting. Scott, thank you for joining us today.
My pleasure.